afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 2nd of October and we're into the final quarter of the year. And we have as our guest today Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, coming to us out of Singapore. As always, Vishnu, great to have you on the show.
Brian, always a pleasure to be here on the show with you. Thanks for having me to start the week.
Now, Vishnu, it's the start of the week. We've got some positive numbers out of China with factory activities expanding for the first time in 6 months. We've also got positive numbers from out of Japan with the Tankan survey. Tell us about your thoughts on how these two data points sort of should influence our thinking, or should it not?
Yeah, I mean that's a really good point, especially to think about whether or not we should get excited about these. I would say that the movements and the direction of travel is encouraging. So it does lend to the narrative of bottoming demand, but it doesn't in any way, give confidence about a rebound or a re-acceleration from here. Primarily because I think China is coming from a period of rather bumpy and lumpy activity. So we need to see sustained pickup in activity rather than taking too much consolation from that one swallow. And as for the Tankan, you can see even within the data points, the large manufacturers are doing a lot better than the smaller manufacturers. And if we look across services as well, it's somewhat more mixed. So the big takeaway here is perhaps the large manufacturers are better placed to ride a bottoming in semiconductor and electronics demand, whereas a much broader recovery in demand on an aggregate basis that has not resoundingly come through, nor does it look like there's a huge promise of it given a backdrop of dwindling savings both in the US and elsewhere, and very high interest rates with rate resetting going on, which means it adds to financial burden. And the last factor is, high energy and food prices means that there's less to spend elsewhere. So those factors put together suggest caution and at best a bumpy recovery ahead.
Now, speaking of caution, we've just averted a shutdown in the US for the next 45 days or so at least. What should we be reading into this?
Well, I think if the US Congress was a guy walking down the street, then he was probably tripping all over and kicked the can a little further down. So averted an accident, not tripping over the can itself, but in no way has it in any way, in any measure diffused the potential for crisis. And there are three aspects to it. One is they've only bought 45 days in terms of extra funding ex Ukraine aid. That's not a lot. By the time we get to mid-November, I think we'll be all, doing a lot of hand wringing and again come about to a point of anxiety as to whether some of these deep rifts between the Republicans and Democrats will be resolved. So that's just at the debt, the debt and the spending level of dissonance that you see in the Congress. Second, and perversely, averting this actually gives the Fed more confidence to hold rates higher for longer, especially against a backdrop of high oil prices as well. So that means monetary policy tightness may at the margin get tighter, not less tight. So that's going to increase the strains on the economy. And last but not least, I think further compromises means that some of that fiscal headwinds from the US could also start to bear down on the US consumer just as savings are being whittled down and some of the moratoriums on loans and repayments start to fall off, which means the burden of repayments also starts to hit the households. And the confluence of these factors means that none of what we've seen, either significantly diminishes US economic risks, and B, nor does it absolve the US of having to prove that its fiscal risks and credit rating risks are now have now completely evaporated. This is a very, very brief reprieve, if anything.
Now, if we're at the start of the week, what should we be looking out for the rest of the week that could move markets?
Yeah, I think we could. This is a rolling thing. So, further conversations between Democrats and Republicans, that's something that we'll probably continue to watch. But we've got a few weeks of watching. So, instead of getting fatigued by this, I think markets may turn their attention to actual data and data sensitivities on those grounds. And to a point that you raised earlier, on PMIs, manufacturing, so on and so forth, we shift our focus to the US ISM, which is their PMI equivalent. And ISM services for the US coming out in the middle of this week, it's going to be quite important. We saw an acceleration before. If we see another acceleration, we have to sit and wonder whether good news is bad news type of dynamics will take shape, because they could see yields going higher, dollar going stronger, and so risk appetite taking a step back, and Asian currencies taking a negative hit. That's one. Going into the end of the week, we've got another data point, which is US jobs. Again, this would be a prime focus as to how hawkish the Fed might remain, particularly if the jobless numbers remain very low and job creation comes closer to 200K or exceeds 200K. Expectations are at about 160K. So that's the kind of benchmark we're looking at. This week, we also have got two central bank meetings. In Australia, RBA will be looking at its policy. We think they'll pause. That's the market expectation as well, that they'll pause. But if it's not a hawkish pause, the Aussie can slip back further, primarily because markets have read last week that the CPI, despite disinflating, has got sticky services components. So we look out for a hawkish hold. Similarly, for the RBI, the Reserve Bank of India is also meeting. Expectations are for hold, not for hike. So one can argue that they can get away with some policy space. But I think between the lines, they probably have to come across leaning on the hawkish side, not the dovish side. And again, this would accentuate rupee risks, whereby the rupee is already under some pressure from high oil prices and twin deficit concerns. So those would be the things to look out for in the region. If we take a step back, it just means that despite some kind of reprieve on the debt ceiling, which has lowered risk aversion, which ought to actually bring the dollar lower and risk currencies higher. Despite that, I think the dollar may not relinquish some of its sturdiness this week. So we keep a lookout for the dollar remaining fairly dominant.
On that note, Vishnu, thank you very much for your insights. Thanks for coming on the show.
Always a pleasure, Brian. Thanks for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.